The US economy is getting better. I think that's something that people tend to forget about. Scaling back asset purchases by the Fed, it will weaken appetite for risky assets. So Asian equities, Asian stock markets will trade lower. But at the same time, you have to remember that the Fed is only pulling back stimulus because its economy is doing better.
Doing better because in the past, Asian economies were expanding, Asian stock markets were rising because of a good US economy.
Yeah, sure, and that's been one of the drivers that's been missing in the last 3 or 4 years. And if the US economy suddenly, if US consumers suddenly start to buy again, that's obviously going to be good for Asian exporters. And obviously currency's taken a bit of a hammer in Asia as well. That's good for export competitiveness at the same time. So this isn't a complete disaster for Asia by any means.
Good for Asian competitiveness, Daniel, but not good for inflation.
Yeah, weaker currencies will push up inflation, and that means central banks around the region will have to think twice about their very low interest rates that they have at the moment. We might see some countries start to raise interest rates. The Bank of Indonesia is probably going to be the first one, especially as it's just raised fuel prices there as well.
Who could be the next central bank in Asia to raise the cost of borrowing as a result of this latest move by the Fed and falling currencies?
I think Malaysia could be another one that starts to think about it. Credit growth has been quite rapid there. Inflation around the region looks fairly low, so I don't think any central bank will be really rushing apart from Indonesia, but Malaysia is one of them.